Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Ashwani and Mitesh with us for BTST Calls. Ashwani, before we take your individual stock calls, I wanted your thoughts on this IT move today. Is this just one of those random moves where you should try to buy a leading sector, or something more sinister here? And what about your BTST calls?
See, IT broke out, I think, yesterday, and today it's basically cleaned out previous 8-10 days worth of data. So I wouldn't be very surprised if this downside continues, maybe not in the same fashion as the bank nifty, but IT can easily give up 1,000 points on the IT index and still be above the 50 DMA. So in case rupee recovers or crude comes off, the IT index is ready for some damage. So that way, if you are making money on IT stocks, it's a good time to get off the bus and then maybe buy in at lower levels, because this 2% move has come after a narrow range. Now, having said that, individual stocks, NIT Tech is a sell with a stop of 1180, target of 1120. LIC Housing is a sell with a stop of 435, target of 418. And UPL is a buy with a stop of 687, target of 704.
Okay, 2 sells and 1 buy. That's the last half-hour trades for Ashwani. Mitesh, what are you going with?
Yeah, I have 1 buy and 1 sell. Hindalco, I think, apart from Vedanta, also looks like getting into some kind of up move. So take a BTST with a very tight stop at 246, look for targets of 253, while Equitas appears to have completed a pullback. The structure is still weak, so sell with a stop at 137.5 and look for targets of 128.
Okay, those are some BTST calls. Amrish, any interesting topics or any interesting investment ideas that come to mind?
Yeah. In fact, I mean, couple of major reasons for the markets to correct like this one was the rupee, the way it corrected, and the second and a global event was the US-China trade wars, and because of this the markets fell and everything else also fell. I mean, all the sectors cracked. But then there's one sector which has cracked, and I don't think investors have realized that they would actually benefit because of both these events, is the export-oriented home textiles and furnishing sector. Because the rupee has weakened, I mean, their margins should improve. And because of the issue, as far as trade wars are concerned with China, competition is decimated to a certain extent. I won't say fully, but to a certain extent. So this should benefit stocks like Himmat Singha, Welspun, Indocount. And these stocks have corrected, especially if you look at the last couple of months, they have corrected quite heavily. So I don't think the downside is very much from here. Whereas when the market realizes this, and once they start seeing it in black and white, I think the upside can be very decent from here.
Okay, well, some news on Samaria Agro. It's a small stock, 12 rupee stock, flying away because of a US FDA approval. For the time being, again, the push and pull fight. Now the Nifty is just about 1 point lower. That's what we're looking at for the time being. So once again, some semblance of recovery seems to be intact. If you talk about movers and shakers, there's some buying on Bajaj Auto, a recovery from the lows. UPL has put on more momentum, 5.5% up. In fact, let me ask you about UPL as well. This big move that's come in today. Any thoughts on the company, the stock?
No, in fact, I've been bullish on UPL all through, and I would just say that it had fallen basically because of the market and nothing very specific as far as UPL is concerned. So it's quite natural for it to come back to these levels, and I'll not really be surprised if I see levels of 850 to 900 in a normal market.
Okay, and one more thing, Amrish, just before we let you go today. The auto space has come under some severe drubbing, including a stock like Maruti, which is at a 52-week low. Yes. There have been murmurs and lots of whisper about weak festive sales and that dealer inventory is really building up, etc. How do you look at this sector? Would you be cautious because of this factor, or would you buy this dip?
Yeah, in fact, in the last month and a half, I've been a bit cautious on Maruti. One, because they were creating records over the last 2 years plus. And whichever of these companies keep creating records every month and month, analysts, start expecting much more than what they can possibly deliver. Although the figures may be good, but it doesn't really satisfy the analysts. And that's what we started seeing in Maruti in the last 2 to 3 months. And now, in fact, when you talk to dealers, everyone talks of high inventory, and this is also supported by the sort of the way the petrol prices have moved up. So I think there is trouble, at least for the next 2 to 3 quarters, and especially for Maruti. I think even the competition in that space where they are, I think that is also increasing quite a lot. We'll also see now Kia coming in over the next few months. Yeah. You also have the competition, which I think somehow has got the models right, and especially someone like Tata Motors. Yeah. I mean, after nearly 15 years, they've, at least in that space, they've got their models perfectly right.
Okay, all right. Let's see how it plays out for these companies and for the market. Thanks, Amrish, for joining us on the show today. The market, which is trying to fight hard, Anuj, you'd have to say, right? We've now almost recovered the entire loss, back to the flat line. But again, I guess the question is how convincing this is. How do you look at the second half?
Interesting, and the temptation today would have been to sell the first point where the market stopped. And I think the market, it's not that kind of market. Last week was a clearly trending market. We're now not in a trending market.
It's more choppy.
It's more choppy. And I think what's really helped the bulls is at least 2 of the stocks have tried to get their mojo back, Reliance and HDFC Bank. You just see the intraday chart on both these names. I think Reliance in particular, the way it's, with its weight in the index, just look at that move on Reliance, Surabhi, now. 1253 is what you have on that stock, and that's, I think, single-handedly taken the Nifty almost into the green territory. In fact, it's now down only about 8 points. Yes, 20-point contribution is what you have from Reliance. And also pull out the intraday chart on an HDFC Bank as well. That's also trying to make a bit of a move. But Reliance's move is bigger, and that's why the Nifty has moved far more than the Nifty Bank, and almost into the green for the Nifty. Ashwani, this was one of your 2:30 calls, I think, or earlier calls in the day. What next for Reliance?
The good thing on Reliance is that the correction wasn't sharp. So that way, this can maintain this rally, but will it get to fresh highs? That looks difficult. Also, oil prices going up maybe sentimentally helps Reliance a bit, but 1280 is possible on Reliance.
Okay, positive call on RIL, and it is definitely helping the bulls case this afternoon. On that note, let's just get back to some more fundamental opinion. Earlier in the day, we caught up with Mihir Vora, Director and CIO at Max Life Insurance, to understand what he thinks of the sell-off in the NBFC universe and whether he would buy in.
There's been lots of rumor mongering and all sorts of messages flying around in the NBFC space, and probably it's a culmination of all the events that we saw with the rating downgrades, etc. And the financial markets, especially the credit markets, are not that liquid to start with. And when you have a little bit of trust deficit, then things tend to get exaggerated very fast. But in the NBFC space, our view has been positive on the fundamentals. We do believe that they serve a purpose. They have their own strengths in terms of business models, in terms of the niche segments that each and every NBFC has identified, and it is making good margins. And pricing power is not a problem, given the fact that you have a large portion of the banking system, especially the PSU banks, not lending to a lot of these segments. So I don't think margins were an issue. Pricing power is an issue. Rising interest rates, again, as I said, not an issue, because you can pass on, NBFCs were able to pass on the rate hikes and the interest rate regime. So I think it's been more of the trust kind of a trust deficit kind of situation rather than anything else in this space. Having said that, in our portfolios, we were underweight in the space because it had become too hot. Valuations had become too expensive to start in the last few months after almost 3 to 4 years of bull run. So we were underweight, but with this kind of correction, probably it's time to start looking at it.
What about the overall market texture? We have had very volatile market. From the top, of course, we've fallen quite a bit, but before that, we had a big rally as well.
So the backdrop is turning a bit weak, I would say, and the biggest factor is oil. Oil, unfortunately, is not going below 80 at the Brent level, and that's impacting the currency and even the fixed income markets to an extent. So I think if you look at just India, I think the backdrop versus say 3 or 4 months back has definitely turned weaker. And this is kind of feeding into flows. We have seen positive flows into mutual funds, but the rate of increase has come down. We are seeing a little bit of deceleration in the positive flows. That combined with the FII flows continuing, outflows continuing from emerging markets as well in India, makes the situation a bit weak, I would say.
Do you think this market goes significantly lower before it finds support? I mean, do we see 10,500?
Well, 10,500 is not very far in terms of percentage points, maybe 4 or 5%. That's a normal correction, I would say. So if that happens, it should not be considered as anything extraordinary, I would say. Yeah.
Okay. So as an investor, what are the places that you would put fresh money to work? I mean, maybe not now, but through the course of the next couple of months, would you look at consumption? Because so many of those stocks have fallen. Is IT still a good hiding place? What would your sectoral preferences be?
Consumption is definitely a theme that will hold up. We are in the pre-election year, so I don't think the government will cut down on the revenue expenditure parts, so which probably may lead to a bit of a higher fiscal deficit than envisaged, but that probably is to be expected in an election year. The monsoons have been good, so I think the rural economy should get a tailwind in that aspect. So government spending plus a good monsoon means that consumption should continue to be a good factor. Plus the government order book led companies in the affordable housing space, in the road construction, and some of the infra and urban infra led projects are also seeing good inflows in orders. So I think that space, which is the construction and EPC space, which is more linked to the affordable housing and government theme, should continue to do well. If oil continues to remain the way it is and goes up further, then of course we would be underweight on financials and go overweight on the exporters. We are already overweight on exporters, but probably go more overweight on exporters.
Mihir, you briefly mentioned that some of these companies that are getting government orders is what you would look to invest into. What are your thoughts on, names like, I mean, not getting into specific names, but what are your thoughts on spaces like defense, names like BEL?
So in the defense space, it's been a very painful long wait, I would say. We did have some exposure in this segment, but it just takes too long for orders to materialize, and then after materializing, the execution times are long. So as of now, we don't have. We've been kind of, we haven't had such a great experience in this space because, as I said, it's been too long a wait.
Well, it's fairly calm, you'd have to say, after a couple of rough days. As of now, so the Nifty is holding around the 11,050 mark, and mid-caps, individual names have done well. IRB Infra, for instance, is on the move right now. Let's pull up IRB, 3.5% up. Kajaria Ceramics is making a bit of a move. So some of these stocks are telling us that traders are kind of warming up maybe to the mid-cap market as well. We have Devang Mehta, head of equity advisory at Centrum Wealth Management, joining in. We also have Dilip Bhatt joining us on the phone line in just a bit. Let me start with you first, Devang. Looking at the way the mid-cap market is shaping up, we've seen some semblance of buying come back today on stocks like United Breweries, right now Kajaria, IRB. Any one or two mid-cap names that you're picking in this fall?
Good afternoon, Surabhi. Thanks for having me on the show. I think yes, there is a semblance of stability that has been established today. In fact, and it's too soon to say whether the stability will lie or not. But I think there are many opportunities not only in the mid cap space but even in the large cap space, where we have seen correction lasting from 5% to even 20-25% in the last few days. So my sense is yes, there are a lot of spaces in the financials as well, NBFCs, some core NBFCs which have never corrected, never seen a correction. To just cite an instance, again not recommending, but something like a Bajaj Finance, which has come down from 2,800, 2,900 levels to around 2,200, 2,300. So I think the niche NBFCs which are in a space where the banks are not present or are sort of absent over there, as well as the PSU bank losing market share, would surely give NBFCs a lot of this market share. So I think some NBFCs along with the consumption stocks which have also corrected just for the sake of good stocks being sold, I think that is where a lot of money would be made. So we are not very skeptical. I think these are the spaces where one should start buying the consumer space, the consumer durables, the white goods. There is this space which looks very attractive.
Okay, we have Dilip Bhatt also joining us from Prabhudas Leeladhar. Dilip, hi, good afternoon.
Good afternoon.
You know, your thoughts on a stock like Maruti? We had a one-day rally, but that's been sold into, and it's almost making fresh 52-week lows. What do you think is going wrong with the sector, with the stock?
I think Maruti surely has been sold off in a big way without any doubt. And I think one of the reasons surely is that there are some concerns about the volumes that are going to come in. I mean, the volumes are very sober in the previous month. And possibly, I think the soberness in the volume sales possibly will continue for some time, is what it appears to be. And I think without any doubt, the stock was overowned, and it's also expensive considering the fact that the volumes are not going to grow up in that manner. So I think all these factors played out in this panic, especially when, you know, quite a few frontline stocks have taken on the chin. And that partly explains why Maruti also possibly participated in this.
Okay. Dilip, just one more stock. Are you willing to buy the optimism on BEL today? Complete turnaround by the market. Suddenly, this whole pricing issue doesn't seem to be such a big concern.
Well, I think once again, for a company like BEL, the intrinsic fundamentals are pretty strong, without any doubt. But whether I would like to buy this stock, no, I'm not too sure about it. I think I will prefer to hold on for a while. I think there are quite a few issues that still needs to be addressed as far as BEL is concerned. So that being the case, I'm not too sure whether I want to buy at this particular level. I would prefer to wait and watch.
Prefer to wait and watch is what you'll do, Dilip. Okay, thanks a lot for that quick take, Dilip. By the way, just want to point out, of course, tomorrow is expiry, so that will happen, but the Bank Nifty future is now at par with spot, and the Nifty futures premium also at par with spot. Now that will happen because, you know, you have expiry tomorrow. So till now you had about there was a time when there was 200-point premium on the Nifty Bank that had come down, but till morning there was quite a bit of premium, and that's also now skittled down quite a bit, and now we have the Bank Nifty future at spot or at par with the spot. Let's take some final thoughts then from our guests. Ashwani, I wanted your thoughts also on Maruti. It had a one-day rally yesterday, but that's been sold into.
See, all bull markets come to an end, but autos are cyclical. It had 3-4 good years, maybe now a couple of years where it does nothing and moves sideways. So, everything that becomes overowned starts to correct at some point. Now, it's had a vertical fall. The 200-day moving average on Maruti is 9,000. So, basically, any sort of, market revival, 9,000 now becomes a target. But should you buy today? Unless your horizon is 1 or 2 years plus, I don't think it should be bought. Chances are we could get as low as 7,000, 7,200.
Wow, 7,000, 7,200 on Maruti. Okay, so I guess, Anuj, 2.5 minutes to go. I don't know when the stock is going to recover, but for us, I guess it's time to start wrapping up the day. Very quiet session. I don't know, any winners at all?
Yeah, but before that, I'll just add one thing. I think from 10,000 to 7,800 on Maruti is a big decline.
Yeah.
I think 22% decline. If you're purely an investor, Surabhi, and you missed out that entire big rally on Maruti, I think perhaps this is now the zone where, you perhaps would want to take a bet. I mean, at the end of the day, if Maruti has to collapse further from here, then, your thought process on the entire market
on entire economy for that matter,
is wrong. So that way, I think it's reaching interesting zones. But the way it's fallen is quite interesting over the last few days. But what was interesting today was the selling in IT. TCS is going home with about 2% cut. Tech Mahindra is down 1.35%. Infosys is down about 1%. So these are some stocks which were down. HDFC is down a bit. Lever is down about 1.5%. Of course, Maruti we spoke about. Eicher Motors is down. So these are some big names which were down. Apart from that, of course, Tata Motors, SBI, ITC. ITC's fall is also quite crunching today. In fact, 3% down on ITC. On the way up, you had stocks like Indiabulls Housing and UPL. Vedanta was up 5%, Titan was up 2.5%, but the real heavy lifting was done by Reliance, up about 2%, and perhaps you would want to add Larsen & Toubro and HDFC Bank as well, though HDFC Bank did cool off towards the last 10 minutes or so.
I am actually just starting off looking at PSU banks because there were no believers today. Yes, the government might be putting in additional 5,000 crores in PNB. That didn't spark any kind of euphoria. In fact, PNB is ending very flat. The rally got sold into immediately. And some of the other stocks are actually weak. Dena Bank, Andhra Corporation, most of these stocks have been on the way down today. Let's talk about other trends. Today was again a day when the sugar rally was sort of getting unwound very, very quickly. So Dhampur, Balrampur, Triveni, Praj, Dwarikesh, you name it. We're talking about cuts between 5% and 10%, depending on which stock you are picking up. On IT, even on the mid-cap IT side, there has been a lot of profit booking. KPIT Tech is case in point, 7.5% down. NIIT Tech is down about 4%. We've seen some weakness on Hexaware as well. That brings me now to some of the NBFCs and mixed trends for NBFCs today. So Canfin is still down 2 to 3%. Group Finance has lost another 2%. On DHFL, the day was fairly volatile. The final close is positive, about 1.5% on the upside on DHFL. So those are some of the names on the downside that stand out. Add a Dish TV to the list of losers. Edelweiss, which is down about 3% as well. So that's basically where the pressure was. However, on the gaining side, not all is lost, because you've got some good buying on stocks like Exide, 6% up on Exide. That was a big mover. HDIL is up about 5%. Some more buying on insurance names like HDFC Standard Life, Wockhardt and MRPL have also managed to find some buyers. And two more interesting names to wrap this up. One is RITES. RITES has had a big rally today, 7% up on that stock. And finally, BEL, with the company clarifying and claiming that there wouldn't be too much of impact of this new pricing policy. It's only a couple of basis points on margins. Rest of their books should be intact. That went down well with the market. Stock was up 11%. Okay. On that note, let's take final thoughts with our experts. So, Ashwani, where does this leave us? I mean, it's a bit of a draw today, wouldn't you say? What would the approach be tomorrow?
See, it's not a draw. It's a loss because if after this kind of hammering, you can't engineer more than a 100-point pullback on Bank Nifty or even 50 points on the Nifty, then, if this is a flattish pullback, then chances of a further decline are extremely large. I mean, by today, you should have gained another 50, 70 points given the fall. But really, the market is not able to hold up. And if you leave aside, 3 or 4 big stocks, there's basically nothing in the market. So my sense is you could have, further similar days. But if we are not going to gain traction on the upside, then the bears will come back in a very strong fashion. So I would be disappointed if we don't even get to 11,250. The shallower this correction is, the bigger the decline will come. So this will actually tell you what is ahead.
Okay. Mitesh, your prognosis, reading into the picture today and how you'd look at tomorrow?
Yeah, so I think in the short term, we'll possibly brace ourselves for some kind of volatile and range-bound activity, broadly 11,150, 200 being the upper end of the range, 11,880, 850, 900 being the lower end of the range. And we'll try to employ some range trading strategies, try to short around the upper end, try to buy around the lower end. But overall, it does look to me that eventually after this consolidation plays out, there could be more declines and fresh lows could be coming, and we would still be open to targets of close to about 10,600 to about 10,550 on the downside.
Okay, fair enough. And Devang, finally, the question to you is, are you buying what has fallen the most? Are you buying these NBFCs?
I think as I mentioned earlier, we are being extremely selective, and this is the point where you know that because of deteriorating macros, you can't be all over the place. So stock selection is right now the key. Of course, the theme selection is very, very important as well. It's very important to be also top down rather than even bottom up. So yes, we are buying certain NBFCs. As I said, the niche space or the consumer NBFCs or something where there is not much of competition is extremely relevant to buy in today's circumstances.
In a momentous verdict, the Supreme Court has upheld the validity of Aadhaar, but with certain conditions. To get a clearer picture on exactly where this subject now stands and what the court today delivered, well, we have with us Ashmit Kumar joining in with all of those details. So, Ashmit, there are caveats that the court is putting in, but Aadhaar stays, right?
The big takeaways as far as today's judgment is concerned, well, for one, Justice Sikri began pronouncing the judgment, and that same judgment has been signed by the Chief Justice of India as well as Justice Khanvilkar. What that effectively means is that the judgment given by Justice Sikri is the majority view. Having said that, again, let's bring our viewers to the takeaways. First up, as far as Section 57 is concerned, this was the critical section. This is the section that allows for private parties also, for individuals as well, to seek Aadhaar from people like you and I for authentication, for verification. That Section 57 has been found to be unconstitutional. The Apex Court has said that as of right now, private bodies, corporations, persons seeking Aadhaar, persons outside of the government seeking Aadhaar is not tenable. Section 57 is not tenable, so that has been struck down. Which brings us to the other takeaways. As far as linkage of Aadhaar cards with the bank accounts and telephones are concerned, that is again that the Apex Court has said needs to be struck down, that as of right now there is no statute in place that provides for such linkages, and that minus the statute, minus the statutory sanction, these linkages cannot be maintained. One needn't. So what that effectively means is, as of today, I need not associate my Aadhaar card with either my bank account or my telephone number. Which brings us to the other side of the story. As far as linkage of Aadhaar with PAN cards are concerned, linkage of Aadhaar for filing of your income tax returns, that has been something. Section 139AA of the Income Tax Act has been upheld by the Apex Court. What that effectively means is that going forward, should I or any of other persons need to file income tax returns, we will need to go ahead and to associate our Aadhaar number, to link our Aadhaar number with the PAN card. That has been upheld, which in fact leads to the broader debate. This, of course, was specific with respect to particular notifications, particular provisions, but what about the larger debate with respect to exclusion? Well, for that, the Apex Court's answer is quite clear, that we cannot afford to throw the baby out with the bathwater, that while there might be cases of exclusion, we need to take into account that Aadhaar is an inclusive regime. It makes services and benefits available to a large chunk of the population, especially at the bottom of the pyramid, and that keeping that in mind, we cannot afford to throw the baby out with the bathwater, that while there might be concerns with respect to exclusion, that the Apex Court would not want to trivialize them, but nonetheless, on the question of inclusion, on the question of exclusion, I beg your pardon, the Apex Court says that the larger public interest shall prevail. On the question of privacy, that was another key question that was confronted before the Apex Court. Mind you, in the year 2017, the Apex Court had held the right to privacy to be a fundamental right. On that question, again, the Apex Court has said that Aadhaar indeed is valid as of right now, that the government benefits that are made available far outweigh any concerns with respect to minimal data that is sought, and on the back of that, Aadhaar continues to be constitutionally valid. So broadly here, let me sum it up for you. The broad takeaways are twofold. Number one is Aadhaar is constitutionally valid, is constitutionally legal, qua vis-a-vis government services and benefits with respect to other entities, private entities, banks, telephone companies, insurance companies seeking Aadhaar, just not tenable, just not constitutional, as held by the Apex Court.
Some much needed clarity out there finally coming in with that Apex Court verdict. Okay, thanks, Ashmit. Let's now get you all the reactions that we picked up during the course of the day from a lot of key officials, legals on this verdict.
It's a welcome judgment. I think that what the Supreme Court has said is that it's necessary for those who are marginalized, and to that extent Aadhaar is valid. I also welcome the fact that they said if somebody doesn't have Aadhaar, he can't be denied his benefits. That's also very important. The other thing that they've said is that biometrics alone are not enough to determine the identity of a person. I welcome the fact that Section 57 has been struck down. That's exactly what we argued. I welcome that 33(2) has been struck down. But most important of all, I welcome the fact that the Aadhaar data cannot be kept beyond 6 months.
ये एक बहुत ऐतिहासिक जजमेंट है जिसमें कि आम आदमी को बहुत रिलीफ मिलेगा। पहला रिलीफ तो ये कि इतने सारे ये प्राइवेट लोग आधार को इंसिस्ट कर रहे थे कि भाई आप आधार कार्ड दीजिए, नहीं तो हम आपका बैंक अकाउंट नहीं खोलेंगे, आपका हम एडमिशन नहीं करेंगे, आपको मोबाइल सिम कार्ड नहीं देंगे, आपको हम ट्रैवल नहीं करने देंगे। इस सब को सुप्रीम कोर्ट ने साफ साफ कह दिया है कि कोई ऐसा नहीं मांग सकता और ऐसा मांगना बिल्कुल गैर संवैधानिक होगा।
Arguments that have been raised against Aadhaar, which have been mainly political, about its constitutional validity, etc., etc., the Supreme Court will find against it, and that is what the Supreme Court has done today. On the second aspect of privacy and restricting the use of Aadhaar to what the Act provides for, which is delivering subsidies, the Supreme Court has upheld that. All of the opposition created by the Congress against it and the fear-mongering of surveillance state, etc., etc., has been found to be wrong.
Well, that's the most welcome provision that it has to that extent protected data privacy, and it has disabled the government from sharing the data with private corporations on the basis of mere contracts. As far as money bill is concerned, the majority has held that it is a money bill, though the reasons have not yet come out. Justice Chandrachud has given elaborate reasons as to why it is not a money bill, and the whole act has to go. One point which has to be examined more in detail is the provision regarding linking of Aadhaar with the PAN card. If it is voluntary, then we'll have to see on what basis it is still mandatory for income tax payers to have their PAN cards linked with Aadhaar. That has to be examined slightly more in detail. But on the whole, it's a great relief for all the citizens. For many, many sectors, you don't need Aadhaar, and it is by and large confined to subsidies, benefits and services.
All right, so that is the landmark verdict finally delivered today. We'll take a quick break on that note. On the other side, all the currency and commodity market action coming right up with Manisha Gupta.
Well, it's been about sugar today, where the markets saw a delayed but a definite cabinet briefing and a clearance of 5,500 crores worth of assistance to the sugar sector, in line with what the markets were really working with in sense of numbers as well. 13.88 rupees per quintal for cane crushing and 1 to 3 rupees per quintal for transport, for freight, for handling, etc. Is what the industry saw. Joining us to talk more about that is Mr. M. Manikam, Executive Vice Chairman at Shakti Sugars. Mr. Manikam, hi, thank you so much for joining us. Well, this is in line with what the industry had been working with in sense of numbers, because, of course, the ministry has been talking about these numbers. I mean, are you applauding these numbers, or do you think even now, even with these numbers, much more needs to be done before the sugar sector can actually come into green?
No, I think this is quite adequate as it stands now. Because we already have the ethanol program which has come through, and then we have the buffer, and then we have this support for export and transport subsidy. I think now the industry needs about 6 months to use all this and come out of the trouble. But I think that's adequate support on all this right now.
Mr. Manikam, you know, even as you do the maths, clearly, even if you are exporting with all the subsidy included in, it still is a loss-making venture. And with the international markets expecting India to start exporting to the tune of 5 million tons, I'm assuming the prices will see a bit of a red there as well. With the domestic prices weaker, with the international markets that would react to Indian exports, what's your sense on prices then?
Actually, the international market today is technically, tight, because Brazil has cut the production by almost about 3 to 4 million tons. So if India is responsible enough and not undersell the sugar, they will have to come up to the price that will be comfortable for us. So we don't need to dump the entire 5 million in the market. Let's say we just give 1 million at a time and then see if we can slowly feed it into the market. We should be all right.
And how are you reading the caveat really? Because the subsidy is available only to those mills who are eligible, who complete all the points that the government has set out, and of course only those mills who will be exporting. Is that a bit of a catch there?
Not really. I mean, because the subsidy would be used for the export to offset the losses. So it's quite understandable that it goes to the mills which are doing complying with the guidelines. I mean, there has to be some kind of a requirement. I think we're quite comfortable with that.
And what's also your sense on the FRP? I mean, that would start coming in from 1st of October when you go for crushing, and the sugar prices, minimum sale price, still continues at 29. Are you wanting a change there?
I think we were looking for a change of the price to about 34 to 35. minimum price. So that might actually help us in a way. With that 34, 35, we should be able to, export this 20% without a major issue.
How are you also looking at the prices going forward? Because with the measures in, you perhaps would only hear about the minimum sale price if an increase there, if that really comes in. But how is the rest of 2018 then looking to you in sense of demand going forward? Because this is a festive period beginning in. Are you looking at support on sugar prices from that part?
Right now the prices have moved up a bit. We do see some movement on prices, and offtake is also fairly okay. So I think with the buffer also in place, there's not going to be too much of pressure in the market. And going forward, Maharashtra said they're going to be producing less. We do not know about UP, whether UP is going to produce the same amount or not. So we could actually see the production come down below the projected numbers, and that should probably be good, I think, for the industry.
So any sense on the prices that you're moving? Because we are looking at prices ex-mill and below cost of production. How are you really putting your maths out for the next quarter?
It could be a little below production until maybe December, January, but this is far better than the prices that we had. 31, 32 rupees, and our cost of production was 33, 34. And earlier we were looking at something like 27, 28. So this is far better than what we are, facing earlier. So we should be in a position to, push some exports out, and maybe then the price will come up to 34, 35.
Well, absolutely. There is some relative comfort for sure. Mr. Manikam, thank you so much for joining us and, breaking it down for us. So, of course, at this point in time, the steps that have come in from the government are positive, but the industry clearly seems to be asking for some more. Well, joining us also on the show now is Aurobindo Prasad Gayan. Aurobindo, hi. Thank you so much for joining us. Let's start with the crude oil prices first, because we have seen some correction come in there after US says that they will ensure supplies before the Iran sanctions come online. How would you look at this correction? Is this a good opportunity to buy, or do you see consolidation continuing for some time?
So I think just a mere profit booking after the statement, and the inventory number which has come up this morning is making the price to correct a bit down. But then we are not sure that price will correct substantially from here. So I think looking at the prevailing trend, buying on this would still be suggested, and maybe we need to be a little conservative in terms of buying the crude oil. So we think the crude oil prices will continue to move in the range of 5,200 to 5,300. So since it is trading around 50 to 50 kind of levels in the Indian market, so we recommend buying on dips around 5,200. So in the case of international market, $71 continues to be strong support level, whereas 73 as a resistance. So I think let's numbers are coming up in the evening, but then buying on dips would still be recommended because the trend is still on to the positive side.
Okay. The other numbers that have come in today, of course, have been the first advance estimates from the government for the current season crop, and it's a record grain crop is what the government is looking at almost at 141 million tons. What is your sense on that? Because we are looking at a higher crop for rice, record high for rice actually, and an increase in crop also for edible oil space, for coarse cereals, etc. How have you read the first advance estimates, and what's your sense now on the Indian agriculture crop?
Yeah, I think barring pulses, I think edible oil complex and cereals, definitely the numbers are higher this year, and we are very positive about that. Especially if I talk about edible oil complex side, I'm sure soybean itself is higher and the other crop numbers are higher. So I think this year, despite having a slightly lower monsoon vis-a-vis the last year, we are expecting a better crop number due to better yield. However, certain crops are going to be affected, like cotton crops is going to be slightly lower this year, and some of the kharif pulses are going to be lower. So broadly, we should see a better crop numbers, and we can give much advance estimates better this year.
All right. So a good crop scenario. Would that really mean some pressure on prices, Aurobindo?
Yeah, I think soybean is something that is already reflected on the prices, and we have been seeing prices falling for the last 2 months or so. I think soybean prices are yet to decline, and we are expecting price of soybean coming down towards 3,000 levels in the short term. However, on the contrary, if I would say cotton price might restrict from major decline from here, and it would soon start rebounding. So 20,000 that we are looking at cotton price in India on the lower side, while 24,000 on the higher side. So buying cotton would be the right strategy, whereas selling soybean would be better strategy.
All right. Oh, okay, Arvind. We get your point there. So that, of course, is the cue coming in for the agriculture space as well. With that, it's a wrap up on this edition of Closing Bell. After the bell comes up next.